Well, good day, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up. I was just thinking about that for a minute here. December 20th, 2023, about 6 p.m. I'm going to take tomorrow off for no reason, okay? I'm in town. I just want to take a day off. My wife's asking me to go to dinner with some people. It's Christmas time. She's been out of town. She's coming back, and I'm not going to, it's the holiday, so I'm going to take a day off. I don't think you're going to miss me, but I'll be back on Friday, and I'll do the weekly charts leading you right into the Christmas holiday there, okay? So I'll be here through all the holidays, through New Year's. In fact, I don't have any trips planned. So I don't like to go away in the cold year. Even Florida's cold sometimes in February. I lived in Miami for 15 years. Well, I didn't live there. I had a second home there. And I remember some of the New Year's Eve, at some years, you'd have everything planned for outside. You couldn't do it. So it sort of put a kibosh on things. So it can be anything. I'm not saying that's how it's going to be there. But you know February, it's a turn. It's beautiful from Arizona all through that. I wait. I can deal with Chicago. By the way, Chicago, no snow, 51 degrees for Christmas. A year ago at this time, we were 14 degrees for Christmas. Does that give you the radical change as to how things are? I was out today. There were people in spring jackets out today. This is highly unusual for the Midwest, but here it is. And the good news is the immigrants, and we are loaded with them. I understand Governor Abbott rented a private plane, flew them into Chicago last night, and just dumped them. I mean, this is crazy. The city didn't know they were coming. Nobody knew they were coming. And they're all over the streets. I mean, you can't go in a store where there aren't a brother with his sisters or a family with their kids, and they're all asking you to give them money. I mean, you feel bad. It's Christmas. You can't give everybody money. I mean, and it's becoming a hassle. So it's not a good thing, not a good thing at all. All right. So where are we, though, in the marketplace? You know, let me bring something to you that I heard today, and I almost fell over when I heard it. Where were the 10-year notes at the end of 2022? In other words, last December at this time. Where do you think they were? 3.88%. Now, you know, we were over 5% just a month and a half ago or so. Where are the 10-year notes right now? 3.88%, thereabouts. Who would have thought they'd be about unchanged with all that we've gone through, with all the rate hikes, the talk that your short-term money's going to 6% plus? You do realize all that has happened, and here you are like that. What has done phenomenal has been for those of you in the stock market. I mean, it's been just a road to heaven, all right? Your portfolios are up as a whole if you've got good investments in there. The indices are up, so if they track them, all your indices are nicely higher. It's been certainly in the tech market, nothing short of stellar. This is a once probably in a generation time that you see something of the size of that in those 7 companies that just doubled or more, many of them more, and ran with it. Okay. So those are the things you got to be looking at as an investor and wonder what the heck's going on. Now, I was shocked today that I got on and we were in the red in the stock indices and finished there. We started there, we rallied during the day. By midday, the market started rolling over, and in the last hour of trade, it was cascading to the downside. The futures are all up a little bit tonight, but it's more of a bounce than anything. I'm not saying it's a top. All markets stop eventually, and then you deal with them. When we look at Redfin, if you looked at today, existing home sales, it's the best it's been in a long time, like 13 months. Yet the market wants to come down, probably fill this gap. As a chartist, that's a signal that that's what I see going on. If it's going to fill it, this could be the run it does. Take out today's highs, and I don't think that happens. So if you can't fill it on this break and you go through that high, I think then you're going to go to another level. I'll show you what I mean in a minute here. Where's the market trying to find its support? Do you see the 200-day average in gray? The market got over it, and now it paused at it twice. there and today. So it either holds it, and if it doesn't, you fill that gap, and you probably then find your support at 817, the 18-day average of closes. What is stopping the rally? Do you see the black Bollinger Bands, this black dashed line? The market only stays over a Bollinger Band or under it 5% of the time. So you get over it, and you had 2 days over it. My rule of thumb is you rarely get beyond 5 in a row. So, that gave me, at that point, something in the neighborhood, a 60% probability you were going to come back to the right-hand side. And you did. And I've done this for years, over and over. Sometimes you break through. You get 7 times. The fact that you can get to 5 if you stay 5 over it is not a sign of weakness. It's a sign of tremendous strength. But it begs a correction of that strength. That's all that it is. I get people that say, oh, you don't understand it, market's going to let go. And I go, you don't understand. The momentum of the market is set in, what it's doing. So that's something I look at. And you lost the embedded reading on the close. So now you got your reading under 79. The odds strongly fail that you're going to challenge, not the 18-day average. If you've taken my course, it's the closest moving average. It's 909, not very far away. It's 9 cents. When we look at Rivian, powerhouse, how many days did we have over the upper Bollinger Band? 1, 2, 3, 4. Today would have been the 5th. Are you starting to get this little bit of rule of thumb? I wish I could tell you that every time it's going to work, oh, it's not going beyond 5. I can't say that. I can say with a high probability, it's rare you get beyond 5. A real high probability that it's rare. It can happen. I'm not telling you to go short there anyway, so it doesn't matter. It's a sign of strength, not weakness. Now, here's the 200-day average in gray again. What do you think you do the first time you come up to an average? There's 250 to 260 business days in a year. You could have said, hey, to the marketplace, instead of a 200-day average, why don't you go to a 250 and now you got a 1-year moving average there? Whoever devised this years ago didn't think that through, in my opinion. But now we're all looking at the 200-day, and you don't want to fight the crowd. When I go to Bulls games, Chicago Bulls basketball games, and I'm walking distance to the arena. I love it there. And you go watch it, and they used to have the bull running through the city, the big animation. And I, for years, told people, I said, you don't get it. You don't want to be the guy fighting that. You want to go with them. And you'll say, but you're with the crowd. Right. The crowd's generally right in finances. At the tops, they're wrong. At the bottoms, they're wrong, because for them, it's going to the moon, or for them, it's going to zero. You and I both know better than that. But if you really look at what's going on and you're a momentum person, which I am, I want to be with them. So I love it when that happens. I stand there and I go, God, that's so cool. Higher lows, higher highs, but into your first level of resistance. Up there, you can see the fight. Real ugly chart in financial services. I've been telling my traders and showing them the weekly chart with this as well in the morning subscriber videos why you can't be long here, and suddenly you're getting capitulation. It's coming down. But it's been one beautiful ride to the upside, one that has been just something you rarely see. You don't get these type of moves that often, my friends. I hope you appreciate what they are. I hope you studied them and you learn from them. If not, that's your problem. I'm redoing my charting course right now, and I'm in moving averages. And I'll have it, I think, done over the weekend. I'm in town until this weekend, then we go for a day or two. I'll be back to business. My wife will stay. But it's Indiana. It's right around the corner. Lower highs, lower lows. Okay, when you reopen in the morning in the industrial sector, the odds are like 90% you're going to lose the embedded reading on the opening. It doesn't mean it'll stay lost. The momentum's still up, but if it stays lost, you're opening the door for 109.53. In order to negate all this, you got to get back through Tuesday's highs right away. I use the word right away. Otherwise, the odds favor it's going to fall. Now, we stepped out to the downside of the sideways action in AMC. I think other people are seeing what I am, but what I think did it in was when we saw the analysts come out and they're predicting ticket sales already for 2024. And I read an 11% decline, that because of the length of the strike, it will be not a great year for new movies. What was in the can and coming out's coming out. Don't get me wrong, in between COVID, we got some nice movies, but they're missing a lot through there. That's going to hurt this. In addition, you're counting awful heavy on Willy Wonka, which isn't breaking records in any manner. Aquaman's the next big boy. That's out already. And then you have some intellectual movies, and the one about Leonard Bernstein and so on, though that won't break records. Might be a great movie, but they're not going to bring in the monster crowds. Aquaman is the one for the kids at Christmas. We'll see what it does. If you get another day like that, be careful. You're searching then for a lower level to find the bottom. If this all of a sudden snaps back, then my idea of $7 is probably still in play as to a number that the market wants to work around before it decides which way to go early next year. In RSPD, okay, you're still with the consumer. You haven't lost the embedded reading. Watch the math in the morning. But you closed at the very lows right here. The way it works on slow stochastics, it's going to drive it down. Now, how much down is going to be the question. If it closes under 79, be careful. You could be going back to the 45. I didn't say it's doing that yet. You're now under pressure. In the home builders, well, great numbers, not for the builder, but great number for existing home sales today, which helps this. Are we going to get further correction? You have an outside day to the downside. You know how to work with outside days? Which brings me up before we finish off all these charts. I know a lot of you work with TradingView, and we've put together and have a package for you. If you work with them, all you have to do is go to our website, and you see all the studies, my version of slow stochastics, the swing line, all this. We made the indicators for it. It's one of the suites. Go to Epstein.com. You can see that right here. Go to the client services on the top right. Can't be any clearer. Give it a click, drop-down menu. You'll see the TradingView indicators. You sign up for them there. We'll get an email in the morning, or we'll get it at night, but we won't look at it till the morning business hours. We'll then turn it on. You'll get an email. It's turned on. You go into your indicator suite. Kaboom. They all pop up for you. Which ones did I put in here? That gets to be interesting, too. The swing lines. The window envelopes. But to get my window envelope values, if you're going to use them, you want to become a subscriber with mine because I update them throughout the day. And that requires a lot of work on my part, but I do it. The different moving averages, not the ones you're seeing here. I put them all on, the ones that I use, and I think you like them. You see the window envelope, my version of the slow stochastics, not the ones you're using, with my formula built right inside of it. And I think outside bars are so important. Your charts will look like that. You can have your own background colors and the like, but that's what it'll be. And all this comes together with my courses and what I do here every night. And for those of you that are subscribers, it ties right together with my morning subscriber videos. You've got all the parts of it. It only takes up 2 of your slots on TradingView as well. So we're approved by them. We got it with it. Epstein.com. You can move your cursor to the top here if you're on a PC, and it'll get you there as well. Sign up for it, and we'll get you signed up. All right, so let's go back to where we were. So, yeah, it's definitely friendly. You know, I think the home builders are in great shape, but I was saying that back here. And I started, if you'll remember, all the way back here when the rates were going higher, and I said, these guys know how to play the game. They know how to buy down mortgages, so if you have to pay an 8%, they can probably get you down to 6%. If it was 7%, you can probably get down to 5%. You're doing it for short periods of time. You can negotiate with them who's going to pay the refi fees if it comes down. They generally will work. That's how they stay in business. These guys are smart. They're not out there building spec homes typically now. They're building your home that you want. My brother-in-law's home just began finally after a year and a half in Florida. What that was about is beyond me. But they work with you. And, I had a talk with him, telling him what I had learned over the many years. I'm older than he is, and explaining to him how it had been. But he's done real well in real estate. He doesn't need my advice anymore. He's done very well. He sold out of Tennessee, made enough there. He's going to live for free in Florida. Higher lows, higher highs. He came in at the right time. That, some of it's just plain luck. In the energy, this has been a nice rally. The trend has been up. If you get back under 83.60, it's a sign things are in trouble. I was watching analysts today on CNBC trying to give reasons that energy should hold up. And one of the things they said is President Biden refilling the SPR. What the person doesn't know what they're talking about is he's got a terrible way of not following through. When in October, he told us he was going to buy, and the oil was there at the prices he wanted to buy. He didn't buy any. He just told you he'd buy 3 million barrels. He bought 2. So you cannot believe the president in any manner on his energy policy, because he doesn't have one. He doesn't have a border policy. The man is literally not in touch with the world. Got to be careful here, okay? You might think I'm very negative on him for many things, and I am, okay? I think he's done a terrible job. It's that simple. Do you think Bidenomics is working for the average person out there? Now, let's understand, I don't know that Trump is who I want, okay? I vote the person, not the party, so don't attack me, please. I am not a staunch Republican. I vote the people, and I think that's the way that I should vote. I don't have to be a party person. I have to be the people person that I think are running. When I look at the Illinois ballot, I'm picking people. I'm not a Democrat, I'm not a Republican, and I'm not an independent. I pick the people, okay? I won't go with the independent. The people's how I like to vote. I'll just share that with you, and it's the way that I go. So am I ripping him apart regularly? I am. I don't think he's capable for what he's doing right now. And we've given him a lot of time, and I'm not impressed. And another election is coming, and I think you have to be vocal if the man is doing a good job or not. I think it's disgusting what Trump does, the way that he acts. So, well, what can I say? But did I like his policies for America? Yes. Do I think they work for America? I do. The man is difficult for me to deal with. And I've never met him, of course, but higher lows, higher highs, just looking at where you're at right through there, a bit overbought. In the gold market, now, I'm still very friendly gold long term. How could you not be? I'm not seeing inflation going to crash down. I'm seeing almost, not quite, but almost, what have we seen now? About 6 or 7 of the Fed members speak since a week ago when we had the Fed chair talk. And to a person, almost, there's been 1 or 2 that are much more dovish, and they think we're going to just start going down in the rates. But as a group, the overwhelming amount that have spoken in public so far think that you're going to be pausing longer, and I can understand that. But I do get the story that the next big move is down, not up. And now we've got to see what's going to cause it. What you want it to be, and nobody's saying this, you don't want to have to drop rates because the economy is in trouble and you got to save the economy. You want to drop rates because inflation is coming down and you don't need to stymie the economy because of that and hurt employment. That is the right answer. And each report's showing that so far, it's a Goldilocks scenario. That's what's going on so far. So the support in gold, I'm looking at 187.68. Silver, I'm enamored at the fact that it's held here. I told you that was where I thought you could be buying. I didn't want to see you take out that number, and for certain not that number, but that's a big risk in it, okay, huge. And I'm not telling traders that they should have bought the full-size contracts. I said you can build this position and see if you can live with it, all right? So there's different ways. Longer-term people that way. Traders, you don't want to see traders. You don't want to see the market under 21.95 and a half, I think it is. Let's get to it exactly. I'll give you the number. Why should I guess? Here's the number I don't want to see it under. 21.66 on the SLV. Okay? I'm dealing in the futures number from my memory, okay? So please understand that. I think the futures, I'm right with the number I said. In the copper, what's driven copper? If you're reading the different news events, Reuters, CNBC, Bloomberg, like I do, you're reading the interviews with the head of copper companies around the world. It's going to be in short supply this year. So the market, originally we were all counting on China. China's in big trouble. Their economy's tanked, period. And we haven't seen that they're doing anything. This whole move has happened without them. This is supply issues, not China demand issues. And you have to understand that. It took me a while. I was definitely behind the 8 ball on that. In TLT, you're still in pretty good shape here. Now, if you lose the embedded reading, and so far you've not shown any sign, then you got these layers of support. I was shocked when I heard that I think it was on CNBC today, that at the end of 2022, you were 3.88%, and you're back there today. I didn't even think about that. You know, it's great when you see interviews of bright people and they bring up things you don't see. You've overextended this break in the dollar, and I've been the dollar bear. I'm looking for the market to fill in something in there. Wouldn't surprise me at all. Look at how thin it got during Christmas in that drop. That's what happened. FXE, not as thin, and 40% of the value UUP is made up of this. But here too, it's overbought. I can see the currencies might want to give you a little bit of a correction and play with it. So I'm Ira Epstein. You will not have me tomorrow. Nothing wrong. I just want a day to myself. Go out with my wife. Be a nice husband. You'll have me over the weekend. I will put out all your updates for you. In the meantime, if you don't see me or I don't see you, you have a Merry Christmas with your family. At the end of the day, they're your best investment. You know that. And you take care. Catch up with you all Friday. Be good.